Everyone loves the idea of something that never loses value. For centuries, gold has carried this almost magical reputation. When things get scary, people rush to it like it's the ultimate safety button. But when you actually look at what happens during different inflation cycles, the story is a lot more complicated than the legend. Gold feels comforting because you can hold it. It's physical. It doesn't depend on a company CEO, a balance sheet, or a government policy. That's why whenever prices rise and headlines scream inflation is back, people start thinking, okay, maybe I should own gold. And sometimes, yes, gold does exactly what people expect. In the 1970s, inflation exploded and gold took off. Investors who owned it felt brilliant. But what most people forget is what happened afterward. For nearly 2 decades, gold lagged while everyday costs still climbed and stock investors quietly built wealth. Anyone who bought near the top had to wait years just to break even. A lot of successful investors talk about gold not because it makes them rich, but because it gives them peace of mind. Think about people who've lived through currency crises, unstable governments, or banking collapses. Gold is like a fire extinguisher. You don't buy it hoping your kitchen burns down, but you feel better knowing it's there. Ray Dalio, for example, doesn't praise gold as the hero of the portfolio. Instead, he treats it as one of several tools that help balance risk. It's not about getting rich, it's about surviving shocks. The hidden truth is this: gold doesn't always react to inflation right away. Sometimes prices jump years before inflation rises. Other times, inflation shows up and gold barely moves. Meanwhile, stocks from companies that actually raise prices, supermarkets, energy firms, technology producers, quietly outpace inflation because they keep producing value. Warren Buffett has criticized gold for this exact reason. It just sits there. It doesn't create jobs, build factories, invent new products, or pay dividends. He isn't saying gold is useless. He's saying it's not supposed to be your main engine of growth. Another thing people misunderstand is volatility. Gold can swing just as hard as the market. During market panic, yes, it often holds up better than stocks. But when fear fades and the world normalizes, gold can stall while other assets catch up fast. That's why many seasoned investors prefer small positions instead of betting everything on it. Not because gold is bad, but because depending only on gold is like depending only on an umbrella. It helps in storms, but you don't live your whole life under it. So when we talk about gold as a safe haven, the real question isn't, will gold protect me from inflation forever? The smarter question is, what kind of risk am I actually trying to protect myself from? If it's total financial chaos, gold can be a powerful insurance policy. If it's long-term wealth building, history shows that relying solely on gold can quietly hold you back. And that gap between myth and reality is where most investors get surprised. Inflation feels scary because it quietly eats your buying power. You look at the same grocery basket, pay more money, and walk out with less. That's usually the moment people start thinking, maybe I should hide my money somewhere safe. But here is the part most beginners miss. Some assets don't just survive inflation, they actually benefit from it. Stocks are not pieces of paper, they are slices of real businesses. And real businesses don't just sit there when costs go up. They raise prices, adjust strategies, innovate, and find new ways to make money. Think about companies that sell basic everyday products. If ingredients get more expensive, they increase prices a little, and life goes on. You might complain at the checkout line, but the business protects its profits. That ability to adapt is exactly why so many long-term investors, from Peter Lynch to Jack Bogle to countless quiet millionaires, stayed invested through inflationary decades and still came out ahead. Of course, stocks are not calm and peaceful like gold. They move fast, sometimes painfully fast. Markets can drop 20% or 30%, and it feels like the world is ending. But here's the difference. Markets recover because businesses keep producing value. New products are invented, new industries appear, productivity increases. Over long periods, that creativity compounds. Someone who owned businesses through the early 1980s inflation, through the dot-com bust, through the financial crisis, and through the pandemic saw volatility, but they also saw rising long-term wealth that gold simply couldn't match. Another powerful point is dividends. Many companies share profits with shareholders. During inflation, some companies actually increase these payouts. That means while prices rise, your income can rise too. Investors like John Templeton and others often emphasize this idea. Owning productive assets that pay you is very different from owning something that just sits in a vault. One works for you, the other waits for you. But let's be honest, stocks are not perfect either. If inflation hits suddenly, markets can panic. If a company is poorly run, no amount of inflation hedge talk will save it. This is why disciplined investors diversify. They spread across sectors, across regions, and across time. They don't chase headlines. They don't panic sell because of one bad month. They understand that inflation comes and goes, but human progress, entrepreneurship, and innovation tend to push forward. So when people ask, which is safer, stocks or gold, the real answer is more nuanced. Gold helps you sleep during crises. Stocks help you build a future beyond those crises. Many experienced investors quietly hold a little of both, but they let productive assets carry the heavy lifting. Because at the end of the day, preserving money is good, yet creating more opportunity from that money is what truly changes your life. And if there's one lesson worth remembering, it's this. Inflation doesn't reward the person who hides from the world. It rewards the person who owns a piece of the world. Success in investing isn't about finding something to hide behind. It's about choosing assets that help you move forward with confidence. Build wisely, think long-term, and let your money serve your future instead of your fears.